Good morning, AM Price. Delighted to be with you. Going to spend some time talking to you about you and your business. As you know, I've been doing some programming on penny stocks and their importance and their, and the role they play in the economy, and particularly how helpful they can be for individuals who are just getting introduced to the stock market, also one of the more volatile places. And so I've been trying to get some insights from some people in the know, and today we're going to be talking to G.H. Anderson. And he's with a company out there called Valvista Capital Management. And GH, welcome to the program.
Thank you for inviting me today.
Yeah, glad to have you on. Kind of give us your elevator speech to get us started.
Yeah, so we here at Valvista run a long-short equity hedge fund that invests in U.S. small and micro-cap stocks, or as a lot of people know them as penny stocks specifically. So what we know is over a 15-year period, micro-cap stocks outperform the rest of the market over the long haul. Now, the challenge is, of course, finding the right kind of names that those growth stocks are going to jump instead of just investing in an ETF-based something like the Russell microcap. So really what we try to do is we do all the due diligence and heavy active money management to kind of find those kind of right names for our portfolio, for our clients.
Okay. What kind of vetting do you do?
So really what we do is that we first and foremost, we start with a quantitative screen. So we look for a lot of different, I would say, multifactorial things we look for in a growth-based company. So when you're looking at a penny stock, you have to be aware that, usually the market cap is somewhere between 20 million to maybe 100 million. In that range. And so what you're trying to look for is you're trying to look for growth factors. So you want high inside ownership because, you want the management team to have a lot of inside skin in the game. You want low institutional ownership. You want some decent trading volume, of course, because, you don't want to be moving markets when you're moving in and out of these stories. And, obviously we'd like to have an enterprise value of less than 12. And then usually we look at the EBITDA, or earnings before interest and taxes and depreciation and amortization. And we kind of look at that's a better, more accurate flow of their cash flow.
Okay. And how long have you been doing this?
So our firm has been doing this. We've been running this fund for about 5 years now. And so we have an audited, track record of about annualized return of about 17.4% net of fees, of course. And that's really what we've been doing for our clients.
Okay. And what kind of investment is typically involved with your fund?
So typically the type of investments, so what a lot of people do for us is that they're looking for exposure in the small and, micro cap space, but they realize that it's a challenging place to invest as a retail investor. There's a lot of due diligence you have to do before you can make an investment. And so a lot of people get a little concerned because there's just a lot of ambiguity there. So our firm, a lot of people reach out to us because of our specialization within that space. So typically the client will range, 5 to 20% of their portfolio to us to kind of, give them this growth capital.
That's pretty ambitious, 20%. I guess they have rather
right.
large. Anyone who does 20% probably has pretty significant portfolios.
That is correct. Well, to be into a hedge fund, you do have to be an accredited investor.
That's true. So yeah, and that's all you're dealing with as accredited investors. Obviously, Okay, that's interesting. What are you seeing out there? Is there more opportunity in the so-called penny stocks than some of the other areas?
So, really what we think is going on is that there's been, for the past 5 years, we call it a beta rally, where all stocks and all prices, especially in the large cap side, have rallied. And so what's happening now is that the large caps with the changing rates of interest are running out of steam. And so what that really means is that we think there's a significant opportunity for investors in the micro cap, small cap space, or in the penny stock space. So what that's going to happen is here in the next 2 to 3 years, we think that, there might be a slight downturn in the large cap space. And then there's going to be a significant chance for appreciation for investors in the small cap space. So really, it's really been tough to kind of compete with the S&P 500 in the past few years. Roughly around 16% return. So really what we're seeing, even in the last 8 months, that the small cap space and penny stock space has returned around 15, 16% for us, in comparison even to the benchmark, which is only doing about 3-4% for us.
Interesting. I wonder if there's a certain amount of hopefulness around penny stocks based on the amazing things we've seen with startups. Is there kind of a connection there?
Well, I think really, a lot of these guys that come when they do their IPO, they usually are not even traded. They're on the OTC. So really what you have to do is that, usually it's a very dynamic team. So what you want to look for when you're looking for a penny stock, you want to look for a management team that has done this before. So really what you're looking for outside of certain quantitative factors is some qualitative factors. Has this management team raised another company before? What's this team look like? Really, do they have the dynamics to make this happen? Because sometimes with penny stocks, which you have to be careful about, is that they still need growth capital. So they'll dilute their shareholder base by doing a second, IPO or a secondary offering. So you have to be very careful with the stories you select.
Yeah, very interesting. Well, what would you suggest people to start when they come to researching penny stocks on their own? Obviously, you would recommend them, going with you. But what if they're not in a position, yet to, to do it? Where would they do their homework?
Well, I think the best thing to start with is that you need to be able to pull the records from the SEC. You need to read the 10Qs and 10Ks. That's really where you need to start looking right there. Now, there's a lot of really great online things that people use as well. I mean, Yahoo Finance is a great spot as well. I mean, using Bloomburg as well, we would encourage that. But, if you're looking for free-based sources, a lot of brokerage houses and things like that, for instance, will provide a lot of information for you. So really just following those things. I think another great spot that a lot of people on the retail side don't always pay attention to is called Seeking Alpha. It's a great spot for people who are looking for stories, for really excellent research out there that maybe you can kind of set your brain on fire for you to do your own due diligence.
Yeah, very interesting. Very interesting. All right. I appreciate your time today. I think it's a great topic, and I want to encourage people to learn more about it. And what's the website for people to learn more about you and your firm, GH?
Yeah, absolutely. So if you want to learn more about ValVista, you can reach us at www.valvistacm.com. Or they can always give us a call at 480-646-4537. And then they can always reach out to me, and I'll tell them a little bit more about what we do here at ValVista.
Thanks, GH Anderson. Make sure you check him out there. And when we come back, much more for you. I do want to remind you, best content here can be found over there at usdatareview.com. And this is The Price of Business.